Hi there, Richard here from Hola Prime. And unfortunately, we've noticed that you've recently breached your maximum overall loss limit in your account, and that you'll have to unfortunately retake a new challenge. Now, although this might be very frustrating, there are ways that you can try to mitigate this from happening again in the future. Now, one of the top reasons for this happening in the first place is that traders trade with a lot size that is too large for any given trade, meaning that they are risking too much on one single trade. Now, that can very easily build up over a few consecutive trades where you take too much loss in your account for one trade and it all stacks up, and you can very easily reach these percentages in your account and therefore forfeit your challenge. All right. So again, one of the top reasons being trading with a lot size that's too large, or not trading with a stop at all and a lot size that's too large. And something happens in the market, like economic news event that comes out, and the market spikes against you, and in one single go, you lose your trading challenge. Right. So I'm going to be using the cTrader platform and show you how to use the built-in risk management feature to help you decide on what the appropriate lot size it is that you should be using when you trade next time again. All right, so I'm going to be jumping over to the cTrader platform, and I'm going to be using, just as an example, a two-step prime $25,000 account size. And you could be using any one of these account sizes, and just go and note what these maximum daily loss limits as well as your maximum overall loss limits are, both the dollar value as well as percentage value. All right, knowing that in the back of your head, and also then only risking, let's say, 0.5% or percent per any given trade, you can then use the risk calculation feature in the cTrader platform to help you control your risk more effectively. Okay, so as you can see, I've got the cTrader platform open here, and I've got a chart loaded of the Euro US dollar. It's set on a 5-minute time frame, could be any market or any time frame that you like to use. Now, for explanation purposes, as I mentioned, I'm going to be using the risk calculation feature that's built into the platform on a $25,000 account. Now, let's assume, for example, that you believe the Euro US dollar is going to move higher from where it's currently trading. Now, there's three ways you can enter a trade. You can hit one of these buttons on the upside, or right click on the chart and use one of those order buttons over there. I'm just going to click on the new order button in this example, and a new window will pop up. This is obviously where you fill in all the details that you want before you execute the order. Again, in this example, I'm just going to be assuming that we want to see the Euro US dollar go upwards, or we believe that the Euro US dollar is going to go upwards. You can just click on the buy button over there. If you thought it was going to go down, you'll click on the sell button. You see on the right here that this line changes: red for sell, green for buy. Now, this is the very important part here, the amount of volume that you're actually going to be trading. And this is the amount that you'll need to change or adjust depending on where you place your stop loss when you actually enter into position. Now I'm going to use a market order for this example, meaning that if I do execute this trade, it will immediately execute. Price wouldn't have to gravitate to an area or a limit, using a limit order before it gets executed. What I like about this platform is you'll see here, once this line actually appears, there's got a stop loss and a take profit button. So if you just hover your mouse over the stop loss, hold your left button in on your mouse, you can then drag and obviously position your stop loss where you believe it would be appropriate. Now, by default, the volume would be set on 100,000. Now, on this platform, it's referred to as volume. So the other platforms, they refer to it as lots. It's exactly the same thing. It's the amount or the position size that you'll be controlling on any given trade. Now, with this example, if I had to use 100,000 volume to get into a position buying the Euro US dollar, believing that's going to move upwards, and I were to position my stop loss at this level that I just dragged it to, I would risk around $597. That's almost $600. That's more than 2% on a $25,000 account, which is way too much, in my opinion. All right, so you can very easily then just go, depending on where you want your stop loss, just go and reduce the amount of volume that you'll be trading. Let's say 50,000 here. Then already you'll see it's just short of $300 at the moment. You can go, for example, to 40,000. And there we have about 235,000. Not exactly 1%, slightly over 1% that you'll be risking should price move against you and take out your stop loss. So by adjusting the volume up or down, you can then control your lot size. I, for example, like using a 0.5% on any given trade. So I can start building a buffer a little bit as my account grows. So you, like I mentioned, have a little bit of buffer and you don't take too much risk or a loss on any given trade. Now, if you, for example, decided you want to give this market a little bit more room to move around and you drag your stop loss even lower, you'll see that amount on 40K will then increase because it's further away from your entry level, meaning that you'll have to reduce your volume again. You can either click on the drop down like I did and go and change that around. You can see this now almost at 1%, slightly over 1%. Or you can just highlight it and you can click in whatever you want to, let's say 33,000. All right. That'll bring me to $270 risk if price would take up my stop loss. So let's keep it at 30K in volume, and that's almost exactly 1% that you'll risk on that trade should price move against you. If you wanted to drag your stop loss closer to the price, you believe it's going to really go nicely up from here, don't want to give it too much space to move in, then that will only be $68. Then in this case, you'll have to increase that amount, right? Until it reflects. Here we'll have about almost 0.5%, a little bit over 0.5%. So I think you get the picture. By manipulating the amount of volume that you're using on any given trade, depending on where your entry is and your stop loss distance away from your entry, you can manipulate that volume so you only risk a small percentage of your account. All right, and then once you're done with that, you can then go decide when you want to place your target. It will also show you a dollar value of what that would be should price move in your direction and it reaches it. But I think for the sake of this video, very important that you know how to control your lot sizes or volume as it's called on cTrader. So you can not trade with too much risk on any single given trade. All right. So again, also the worst thing you can do is not trade with a stop at all. Always trade with a stop. Control the amount of volume that you're trading with any given trade, and only risk a very small percentage of your account, so you don't reach that maximum overall loss limit in one given trade or over a few consecutive trades. And obviously, once you're happy with all of the order placements, you can just go and say place order, and you'll get into the market. Okay, thanks for watching. I hope that this information will help you out during your next challenge. Again, risk management is the most important thing in trading, and making sure before you get into a trade using a stop loss and knowing and be comfortable with the amount of risk that you're taking is extremely important.